And we have sparred over the years. I love Tesla. I've never loved the valuation of Tesla. And you have loved Tesla and the valuation of Tesla. And you've liked the valuation even at much higher levels. And I have always thought, as you know, that that's crazy. And you have been right. So here we are. You still believe that this is a company, that the valuation long-term is $3,000. That's your price target.
That's our base case.
That's your base case.
Yeah, that's not even our bull case. But let's just stick with the base case from $700.
$3,000 by when?
5 years. Always 5 years.
Always 5 years. You recently sold some last week, right?
Yes.
About $180 million.
I read that it was 130 million. So it got so much press.
Oh, I'm sorry, 180,000 shares at $130 million, right? Why'd you do that?
So Tesla is still the largest position in our portfolios. On that particular day, and I can tell you this because we disclose our holdings every day and we publish our trades every day. On that, I'm always looking for cash in especially the flagship fund, which is very concentrated and involves all of our technologies. So a company in the automation space, UiPath, was down 11% that day on its earnings release. And Tesla had just gone up 30%. So it was really a tactical move. So just to give you a sense, Tesla is a 10.5% position in the flagship fund. The next highest position is, I think, 5.9%. So the conviction, this was, I will take a trade up 30%, down 10%. That's like a 40% difference. That's all that was.
But this is not a stock, I mean, at least recently, that has been on the move higher. In fact, it's been flat to down. So
no, it's actually, if you look at it, it has been levitating. It has. We got into the 500s. It got well below 500, I believe, in the.
But I assume, therefore, that it must have crossed 10% a while ago. Meaning, you must have been much higher.
So when a stock moves from 10%, we can no longer buy, and thank you, I want to address this because we keep getting questions about it. We cannot buy a stock if it is 10% or higher in the portfolio. We can sell, of course. We do not have to sell. And what we usually do, this is not science, very unpredictable, so you can't replicate this in terms of trying to figure out what we're going to do. But when a stock gets to 11 or 12% in the portfolio, it means that it has appreciated by 10 to 20% relative to the other positions in the portfolio. And usually what we're doing is being opportunistic and taking advantage of a drop in a stock. Again, need the cash, largest position above 10%.
Okay, let me ask you.
Does that make that?
No. It makes sense. I know there will be bulls and bears on this. Let me ask you a different question though, and it's really about how to assess and think about some of the comments, projections, and other things that Elon Musk makes about the company, and how you interpret them, and how the public interprets them, and frankly, how bears interpret them. Which is to say that there's a lot of times where Elon will come out and say something, whether it be about robo-taxis or when there'll be full autonomous driving, or all sorts of things that I imagine at some point, because we've had these conversations in the past, do get baked in or should be getting baked in to some kind of assessment of the stock. And as optimistic as you can very well be about all of those things, they haven't come true. And so how do you grapple with that?
This is one of the hardest problems that we are going to solve technologically. So actually, in the last 3 months, we have increased our projection for autonomous taxi networks. Now, in the $3,000 base case, we assign a 50% probability to autonomous. So it's a really hard problem. But if anyone is going to solve it, our confidence that Tesla is that company has gone up dramatically as we've learned more about it.
But I guess when I ask you, when Elon says that robo-taxis by the end of 2020, when you project, what numbers would you therefore have put in 2019 when he said that, or 18 when he was saying that?
Yeah. Again, 5-year.
I know.
Our probability last year, or whenever he said that, was lower. I think we had a 25% probability.
So do you discount what he says by what number? That's
Elon. If you really look at what he's doing at SpaceX and at Tesla, he's changing our world. Right?
You're not going to get me to disagree with that. I think it's simply about the valuation and how investors should think about these numbers.
He was the first person when we were talking about autonomous taxi networks, he said the last mile is going to be so hard. I'm not sure it can be done. This was about 5 years ago, maybe longer. The resources that he's putting into this program and the talent that he's attracting and the advancements that he's making and that are possible now that artificial intelligence training costs are dropping by 68% per year, we think the probability of autonomous is going up.
I don't disagree, but does it frustrate you?
No, he's a visionary, and he sees the future so clearly. Right. The fact that he changed from saying last mile, I don't think that's going to. There'll have to be some combination system. He changed from that with his partner Andrej Karpathy, who is one of the most brilliant artificial intelligence engineers. I think this is going to happen in the next few years. He is always a year or 2 or 3 too early. We adjust for that in our forecasts.
What do you think about the prospect that one of
and by the way, may I say one other thing? One of the reasons Elon does that is he wants to get the supply chain in motion. And when the supply chain does not cooperate, he brings it in. He's becoming much more vertically integrated. So auto suppliers and technology companies know that if they don't march to his drum and at his cadence instead of these 4 to 5 year design cycles, they're going to lose the business.
A lot of short sellers have lost a lot of money betting against Elon, as you know. And one of the things that a lot of short sellers will tell you that they missed was not actually the technology or anything else per se, but was the scale and ability to go back to the market over and over again to get more and more capital. That the scale of the capital unto itself that could become almost a self-fulfilling prophecy if there were people out there willing to impart their capital to you over and over again. How much of that is in your thesis? The way we would frame that is we believed that Tesla had 4 barriers to entry, and all but 1 have increased in the last few years. So they have the artificial intelligence chip. They have the best battery technology, costs lower and will be lower for the next 3 to 5 years. They have the most data to do the training and find corner cases. And then the last one, which I would have thought they would have lost already, is over-the-air software updates. I haven't had to take my Model 3 in since 2018. They have the best cars on the road. So your base case is 3,000. What's your best case scenario?
The best case is about 4,000, because we will never go to, we won't go to 100% in that autonomous, but let me give you the dynamics there. If you had asked me last year, I would have told you that the autonomous taxi network opportunity in the year 2030 would be a $6 to $7 trillion revenue opportunity. We have in the last year raised that to 10 to 12 trillion, and it is because before we had been modeling as though the costs would drop to where they should, given competition, which is 25 cents per mile. Right now it costs us 70 cents per mile to drive our own cars. We are learning, and it's through Uber and ride-sharing services, that convenience matters a lot and not having to drive matters a lot. And so our price for the robo-taxi service has gone up from 25, I think we're up to, it's either 50 or $1 per mile.